Good day. You need to see this chart. You need to understand this chart and why you need to act. And how to act, I will give you at the end of this Wealth Minutes today. So, welcome to Wealth Minutes with Michelle. I'm Michelle Keller. Good to see you here today. The world is turning faster and faster. And something happened this week again, which gives us, let's say, some hope, at the same time, a lot of concern. If we'll look at the charts, and I'm going to share with you a very important chart, and because of this you will understand why this is so important and what you and I can do to protect ourselves for the upcoming downturn. Okay, let's look at what happened. Now, this you probably know already. A couple of weeks ago, I think 2.5 weeks ago, the U.S. gave a bailout, $2 trillion to the U.S. public. At the same time, what happened now this week, Europe approved $590 billion, which is around 540 billion euros, half a trillion euros, as a stimulus to the whole Europe. And this is a lot. This is a huge amount of money. Now, there is a lot of bailouts coming here, and this is only the start. Let's look what also is happening. And what's happening is quantitative easing, QE. And here it says, is a monetary policy whereby a central bank buys government bonds or other financial assets in order to inject money into the economy to expand economic activity. And this is important. That's why there is bailout here happening, because the economy has stopped a couple of weeks ago. Slowly, it starts moving again, or will be moving in the next couple of weeks and months. And here also it says, an unconventional form of monetary policy. It is usually used when inflation is very low or negative, and standard expansionary monetary policy has become ineffective. And that's the important thing, has become ineffective. And in the last couple of years, you will see in a moment that the different central banks, for example, the European Central Bank, and in the US, the Federal Reserve, they started with a program putting money into the market, which is called quantitative easing. And the reason is because the usual way of having monetary policy wasn't effective enough. And this is a very dangerous part we are on, and a lot of experts have been sharing this for years and years. Now, let's look how that works. Let's look at for example, the Federal Reserve, the balance sheet. So, what is quantitative easing? The Federal Reserve, and let's look at an example for the U.S. and why we're doing that, because the U.S. is the strongest economy so far in the world, and it's a leading economy, and whatever they do, it will affect the world, not only because it's a strong economy, but also because the dollar is there, and that's a leading currency, and all like oil and gold and all the other products are being attached to gold. So the monetary policies of a lot of basically of all the countries in the world are attached to the dollar, and that's why the US as well as the dollar and whatever they are doing is so important for all of us, for the rest of the world. So the US, the Federal Reserve, prints money to buy long-term financial assets and to give it to the financial institutions. And especially now, the financial institutions are having are starting to have a lot of problems. And that the same happened in 2008, where we had the big financial crash and crisis. And that's when it started with quantitative easing. And after that, the Federal holds these securities on its balance sheets and brings it back into the Federal Reserve. Why they're doing that? To add money directly into the economy. That's exactly what's happening here right now. And lower long-term borrowing costs. Also this, and support job creation. And fast forward to today. Let us see when it started. First, in quantitative easing, it started in the QE1. It's called QE1 2010. There they started to put around less than 3 trillion into the market. Here it started 2008, as I said, and it started more and more and more. And now we are in QE4. And as you can see here in the line, here, this was 2008. That's the amount. Now we are in 6 trillions and more and more and more. Some are saying that it will be added up to 10 to 12 trillion dollars. It's an unbelievable high number into the market. So look at this here also here, and that's the important chart here. In perspective, that was QE1. Then they doubled it into QE2. Then there was QE3, which took longer. And here you see how long it took. And now we are here. That's what happened. And this is not the end. It will be moving higher and higher and higher and growing and growing. Now, why is that important? A survey of small business owners found that 51% do not believe that they can survive these pandemic for longer than 3 months. And that's why the industries, the governments are putting money into the market, because they know they need you and I and business owners. So how does it actually work, right? As they say here, in the current low interest rate environment, because the interest rates are actually zero, if not below, so they don't have any other tools at hand, the policymakers, then putting money into the market. And a lot of experts have been shouting out loud that this is the oil into the fire. It will help us on the short term, but not on the long term. And in the current low interest rate environment, the effectiveness of such policies is diminished. When short-term rates are already so close to zero, reducing them further will have little impact. So they actually don't have any other options than putting money into the market, because also the people are starting to shout, hey, we need some help. And if the governments are not giving money to the people and the industries, then there will be some unrest. And the least what policymakers want is social unrest. Nor you nor I do like that. But what it says here also, it's uncharted waters. QE falls under intense scrutiny due to lack of empirical evidence so far. And here, Kevin Logan, the chief economist of HSBC, says this is a big experiment. It's something that's never, ever been done before, because there is so much money into the market. And also here at the end, what do they say at the end? That there is no end in sight. Now that the Fed is undertaking its most aggressive QE, quantitative easing program, yet it's a tough guess as to when equilibrium will return, if ever. So what effect did this have in the past? Let's look at, I give you some pictures. Look at this, what happened in the Weimar Republic, 1929 to 1933. Here, hundreds. This is only one person, right? This is perhaps his wage, what he got for a month. That's how much it was. And then kids were playing with money because it didn't have any value. Didn't have any value. They were building bricks and walls and having fun here. And here, because it was paper, this lady was heating her room with money and bonds because they lost any value. And so what it says here, hyperinflation. And this is the big danger where we're in, moving into inflation or hyperinflation. There are two different ways of thinking. One say that we will have a deflation first and then move into inflation and then hyperinflation. And I'm sharing this also on a webinar, how it was in the past and how in what countries there is hyperinflation, and what effects does it have to the people in these countries. And what you can do is, there are some tools to prepare before it's getting worse. I'm not talking about the doomsday here, and I don't want that none of us is moving into that. But if you look at the charts, and on the webinar, I share all the information, more charts, more information, because in order to make a valuable decision, a valid decision, you need to understand what is happening, what has been happening in the past crisis, and what's the possible outlook for you and I. So therefore, if you're interested to know what you can do, write down in the comment webinar, crisis webinar, write it down, and I will send you an information about that, special information, how you can enter this webinar and join this week. It will happen during the week. So get all the information there when it happens, and then what you can do. Write on the comments below, crisis webinar, and I will send you a special message so that you can join. I wish you all the best for the next decisions, which you need to do, and I need to do today. I am doing that, and I wish you a wonderful day. Preserve your wealth, which is necessary, and accumulate. Also, next step is accumulate assets and also prosper. This is important. Excuse me, important. And also stay healthy. I wish you all the best. Until next time, we're going to see each us again. All the best, and write down crisis webinar, and I'm going to send you a special link. All the best.